Hey everyone, I just invested today close to $3,500 in Berkshire Hathaway. Many of you are wondering right now, why did I do that? And what is my reasoning behind that? Some of you are wondering if this is my only investment in Berkshire Hathaway, or will I be adding more shares to this position. The second point that we're going to talk in this video is, why did I choose Warren Buffett's company? Why didn't I choose any other companies at this point, knowing that a lot of companies might be overvalued despite the fact that we've seen a pretty big recovery since those March levels? The third point in this video will be, how is Berkshire Hathaway positioned during this economic downturn? We will go through some of the financials and see how the company is positioned. This screenshot shows that today's transaction. So I bought 20 shares of Berkshire Hathaway at an average cost of $174.38. So the total equity in this position is $3,487. I will be adding more to this position. I plan to build it to a larger position if the stock keeps going down, especially if it goes at around $165 level. So if it goes to that level, I plan to double this position. I will not probably buy more than 50 shares. If the stock keeps going higher than 174, then I might just stick to these 20 shares. Before we move on, please leave a like for the video, subscribe to this channel so you don't miss any future videos, and leave a comment down there on what you think about this transaction and this investment in Berkshire Hathaway. Berkshire Hathaway has a market cap of $423.5 billion. The company does not currently pay any dividends, and the stock price has been ranging in the last 52 weeks between 159 and 232. The current stock price of Berkshire Hathaway is sitting at around 174, and this is around 30% down to its 52-week high point. So this seems like a reasonable level to start such a position in such a great company. Investing in Berkshire Hathaway is equal to investing somehow in a mini index fund. So investing in Berkshire Hathaway, by investing in Berkshire Hathaway, you are technically investing in all of these companies that you see that they are currently holding: American Express, Apple, Bank of America, Bank of New York Mellon, Coca-Cola, Delta Airlines, JP Morgan Chase, Moody's, US Bank Corp, and Wells Fargo. And you can see to the right the percentage ownerships that they have in any of these corporations, and then the dividends that they receive. These numbers are in millions, and the retained earnings. So the company is well positioned and well diversified. So these are just some of Berkshire Hathaway's largest holdings. In this table, we can see to the left the shares that they have in each of these companies. To the right, we can see the average cost of each company and the market value. At the bottom, total equity investments carried at the market. We can see that it cost around 110 billion to buy all of the shares in these specific companies, but the market value for these companies right now, it's more than doubled. It's at $248 billion. This is a list of the companies that Berkshire Hathaway is partially owned or it fully owns them. Berkshire Hathaway has outperformed S&P 500 since 1965. This is a table that shows all the returns between Berkshire Hathaway and S&P 500 from 1965 to 2019. We can see that Berkshire Hathaway actually outperformed S&P 500 by more than 10% in compounded annual gain from 1965 to 2019. But the overall gain for Berkshire Hathaway is 2,744,62%, whereas S&P 500, it's only 19,784. This shows how good this company is positioned. if it beats S&P 500 for the past almost 5 decades, that shows that the company is really well positioned and diversified in every kind of industry. As I said, the company is very attractive at these valuations. On top of the reasons we just mentioned why is it a good investment, this company keeps a lot of cash on hand. According to this CNBC article, Berkshire had a record of 137 billion in cash and equivalent instruments on its balance sheet at the end of first quarter, up from 127 billion at the end of the year, a 10Q filing showed. And the second bullet, it says that the company spent just 1.8 billion buying stocks and just 1.7 billion repurchasing Berkshire Hathaway shares. This company is just enormous. There is no other public company in the world that has a lot of cash just sitting around. They are pretty much ready for anything. Berkshire Hathaway always keeps a lot of cash in hand in case of recessions or in case of any economic downturn. They take advantage of opportunities. When stocks fall, when the companies are about to go bankrupt, they buy them out if they see that the business model is very profitable. Berkshire Hathaway is just a cash king. It sits on a lot of cash, and especially during great economic times, during great bull markets, the economy adds a lot of cash to its balance sheet because they know there will be a downturn in the economy and in the stock market. So whenever there is a downturn and they already have a lot of cash on the side, they deploy a lot of that cash into the stock market or into buying a lot of great businesses with great business models. As this table shows, that right after the end of Great Recession and right at the beginning of a historic bull market, the company started piling on cash again because they knew that those times, those rough economic times, are ahead of us. So the company in 2011 had around $37 billion in cash on hand. This is excluding any equivalent instruments on the balance sheet. But by 2019, cash on hand was around 64 billion. They almost doubled their position in cash on hand in their balance sheet. So now here we are in 2020 and we are experiencing one of the worst economic declines in the history, and the company is ready to deploy a lot of cash. The company is sitting on billions of dollars of cash, and the company is just looking around right now to see what stocks, what companies, what great business models to pick. Sitting on cash will make you a king this year because now you have the option and you're going to take advantage of these great opportunities in the stock market and out there in the real economy. When talking about the management, there's not much to talk about it. These two people, Charlie Munger and Warren Buffett, are the symbols of investing. These two great minds made this company one of the richest, one of the best, one of the strongest in the world, not only in America. Businesses they invested in have outperformed many other businesses, bringing in a lot of cash to Berkshire's balance sheet. Geico, the second largest insurance company in America, is a great example of a business that Berkshire Hathaway fully owns. This company brings in a lot of cash to the company. It has a really stable and great business model. These two great minds of investing have made some really great investments in the stock market, with many of the stocks, as we saw in the beginning of this video, bringing in great overall returns over the past 50-60 years. So Berkshire's management team is one of the best, if not the best, out there. As we can see from this picture, the stock is trading at around 174 as of today. The last time the stock traded at these levels was back in mid-2017. So the stock, if you buy the stock at these levels, you're getting a much better valuation than if you were buying the stock at these levels back in 2017. I am saying this because in the last 3-4 years, the company has definitely increased their revenues. they increased their cash and cash equivalents, they have increased the net income, and I'm sure they did a couple more small acquisitions and investments here and there. So buying the stock with all of these in mind at these price levels is ideal at this point. Therefore, I will be a very long investor in Berkshire Hathaway, and that is because of these listed reasons as discussed during this whole video. The company is partially and fully owning great businesses. The company has a very diversified portfolio. It feels like you're investing in a mini index fund. It has a tremendous balance sheet. It's sitting on hundreds of billions of dollars in cash. It has great management team for decades now. And stock is right now at very undervalued levels compared to the rest of the market. So that's why I decided to pick up some shares here. Will I be buying more shares in this company or just stay with 20 shares only? I will definitely buy more shares if this stock is going to go to 170 levels, especially if it goes to $165 levels. I plan to have around 50 shares in total unless the stock dips to 160 or lower, and that's when I would definitely buy more than 50 shares in this company. Alright everyone, I would love to hear your thoughts on this specific topic by leaving a comment down there. Please hit the like and subscribe to the channel for some more future videos. Thank you so much for watching and listening to this video.